Good morning. Robinhood is suing Massachusetts for fines on charges the company didn't act in the best interests of its clients. Robinhood said there was no legitimate basis for the claim. It's what happens when you start trading through an app, I guess. U.S. equities are up, the Nasdaq jumping 1.31% to record highs despite an increase in the 8-week yield. Continuing jobless claims disappointingly increased this past week to 3.73 million, while the initial rate dropped nicely by a third to 576K. March retail sales soared by a 10-month record 9.8% following a 3% contraction in February, and industrial production increased by 1.4%. Again, better than last month's contraction, but missing expectations of double that rate. The continuing computer chip shortage is apparently hurting producers much less than increased demand is pushing it. Cars and parts sales are up 71%. Food and beverage locations are up by 36%. At 2 p.m., we'll be getting construction data from the U.S. and wholesale sales from Canada. European indices are mostly up, except in Spain and Italy, which lost about 0.5% each. CPIs were slightly up in March in Europe, except Germany, where a two-tick contraction to 0.5% still left the year-on-year mark up to 1.7% from February's 1.3%. In the UK, car registrations in March soared by 11.5% year-on-year after last month's 35% contraction. The month-on-month measure, in case anyone wants to hear it, is 453%. They're also up 50% in Germany, 37% in France, month-on-month that is, year-on-year, while the Northern Ireland Protocol out of the way, the European Parliament yesterday finally ratified the trade agreement with the UK. Vicky Price, UK head of the Government Economic Service, yesterday told Trade Commission members that more small companies were likely to go out of business as a consequence of Brexit red tape and regulations. According to her, any deals with the US to counter this will have minimum impact if and when they go into effect in at least 2 years' time. Still ahead today, CPIs in February's trade balance from the EU at 9 GMT. Asian benchmarks mostly up this morning, except Australia and Shenzhen, which are slightly south of breaking even, despite extremely good data from China. A 34% increase in retail sales and 24.5% for industrial production, thanks to the government's support for small enterprises. Q1's GDP came in at 18.3% up year-on-year, missing expectations by 0.7%. But tripling the previous quarter. Most analysts and even Chinese officials, however, expect a pullback from these something reactionary numbers. Oil continues nicely up as Bloomberg this morning reports that ExxonMobil might sell its stake in Iraq's Western Qurna-1 oil field. Exxon's debt is now over $70 billion because of COVID-19, and Moody's has even downgraded the company twice in the past year. The Baker Hughes count will be in at 5 p.m. Reuters this morning informs us that Walmart's marketplace has grown well beyond the 70,000 sellers point thanks to the COVID lockdown, and they expect that to increase by 146% by end 2020, especially when next month the company will open its doors to foreign vendors. Amazon, by comparison, expects to have 7.5 million vendors by that time. Still, Walmart's conditions are much more appealing to those vendors, according to the article. And then there's that still huge and viable bricks and mortar chain. And if we're mentioning Amazon, Jeff Bezos yesterday announced that Prime membership is now over 200 million worldwide. In earnings, Bank of America yesterday announced a 0.2% increase in Q1 revenues year-on-year, while Citi revealed a 7% contraction but a 241% increase in EPS. This as Washington increases bank lending policy oversight for lockdown-impacted families and SMEs. Pepsi revenues increased by nearly 7%, while BlackRock's increased by 19%, and Delta continues taking hits with a 60% drop in revenues year on year. Ahead today, our final big bank of the group, Morgan Stanley, alongside Taiwan Semiconductor and Steve Madden. Well, Friday is usually a quiet earnings day. We'll be back Monday. Till then, happy spring.